Okay, so our recording has begun. Well, good afternoon, everyone. Thank you for joining us today. Today is the second event hosted by the Loudoun County Department of Housing and Community Development to celebrate Homeownership Month. Today's topic is foreclosure prevention and financial literacy for homeowners, and we're so excited that you're able to join us today to hear from two representatives from HUD certified housing counseling agencies. Before we get started, I do have a few housekeeping items that I just wanted to share. I already mentioned that our session is being recorded. I also wanted to mention that in the chat is a link for closed captioning. If anyone would like to access the closed captioning, we have with us captioner Julene. Just click on that link and it will open in a new browser and you'll be able to follow along with the captions if you'd like to that way. And we also just wanted to note that this session is for educational purposes only, and it will not be providing any legal advice. No one on the panel is a lawyer. The two panelists are HUD certified housing counselors, so this is just for educational purposes only. But there's going to be some really great information shared. So with that, Karen, can you go to the next slide, please? My name is Christine Hillock, and I'm the Community Development Specialist with the Loudoun County Department of Housing and Community Development. We wanted to take this opportunity to just share a little bit about the Department of Housing and Community Development. We are a relatively new department. We were established in March of this year. Prior to that, we were the Office of Housing, and prior to that, we were a division within the Department of Family Services. We're excited to be a new department, and I have listed there several of our programs that we offer in addition to educational webinars such as this one. We have a variety of homeownership programs, rental programs, home improvement programs. We also manage the community development block grant for the county, and we work with developers, affordable housing developers, to increase the supply of affordable housing in the county. We are excited that our Board of Supervisors approved an Unmet Housing Needs Strategic Plan this past September, in September of 2021, and that outlines a number of goals and strategies to address those unmet housing needs in the county. And that will kind of guide our work for the next several years. And if anyone is interested in learning more about the Unmet Housing Needs Strategic Plan, the full plan and related documents are available online at loudoun.gov/housing needs. And then details and eligibility criteria and actual applications for all of our programs are also online at loudoun.gov/housing. My contact information is on this slide in the bottom right. Feel free to call me directly if you have any questions, or email me at christine.hillock@loudoun.gov, or you can also send an email to our general housing mailbox, which is housing@loudoun.gov. And I'll ask you to advance the next slide. Great. Well, like I mentioned, today we have two representatives from HUD-approved housing counseling agencies. Before we got started with the content, we did want to share that there is a tool online, also in the bottom right of this slide, on the HUD website, where you can search for a number of housing counseling agencies by zip code. So if you go to that web link, you can put in your zip code, and it will list all of the HUD-approved housing counseling agencies in our region. We say that because we also want to just remind folks that these are two representatives from two of the many housing counseling agencies in our region. We're very excited. They have a tremendous amount of joint experience between the two of them. I don't know if I didn't count up the years, but there are many, many years of experience between the two of them. But we did just want to remind folks that you have a choice. You're not obligated to receive, purchase, or utilize any other services offered by Latino Economic Development Center, Northern Virginia Family Service, Cornerstones, or their exclusive partners in order to receive housing counseling agencies. You also have the right to shop for and select all of those things listed on the left there: your lender, the loan product, other service providers, housing and credit counselors, real estate agent, home inspectors, and settlement agents. And Karen, you can go to the next slide. We were planning to be joined by a third representative today from Northern Virginia Family Service. Unfortunately, she's not able to be here today, but we did at least want to also include information about NVFS, a great organization in our community. There's their mission and some of the services they provide, and contact information for Courtney McGee, who would be happy to provide you additional information about the housing counseling services offered by NVFS. And you can go to the next slide. Great. We are joined today by Karen Surface with Latino Economic Development Center. LEDC, you'll see that their mission is listed there, and they have a number of services that we've also listed there. I'm not going to read off the slide, but I am going to read off a little bio for Karen Surface, who's also working our PowerPoint. Thank you for doing that as well today, Karen. But I'll take just a few minutes to tell you a little bit about Karen. Karen Surface is a HUD certified housing counselor and program manager with the Latino Economic Development Center in Arlington, Virginia. Prior to working at LEDC, she was the executive director at AHOME, which is the Arlington Home Ownership Made Easier Incorporated. For over 25 years, she has worked to increase home ownership opportunities for low and moderate income households who wish to purchase their first home. She teaches Virginia housing homebuyer education classes and provides pre-purchase, post-purchase, and foreclosure prevention counseling. In 2020, Karen was appointed to the Arlington County Commission on Housing, a volunteer-appointed citizen advisory group responsible for advising the Arlington County Board on housing policy issues and funding allocations. Karen is a member of Virginia Housing's Home Ownership Advisory Board and a co-chair of Arlington County's Home Ownership Working Group. In 2007 and 2008, she served on Governor Kane's Virginia Foreclosure Prevention Task Force, and in May 2004, she received an Award of Excellence from the Virginia Association of Housing Counselors. Prior to working with first-time homebuyers, Karen worked in the banking industry for 8 years. She's a graduate of James Madison University, where she received a Bachelor of Business Administration in International Business. So welcome, Karen. And when Karen speaks, and also when our other presenter speaks, they will tell the audience a little bit about how you can access services here in Loudoun. Even if Karen is sitting in Arlington, you can access services through LEDC if you're out here in Loudoun. But before we go there, if you could move to the next slide, I'd like to introduce Martin Rios. Martin is with Cornerstones, and you'll see there the mission for Cornerstones and many of the services offered by Cornerstones, and Martin's contact information is listed in the bottom right. And I'd like to just tell you a little bit about Martin as well. Martin Rios is a bilingual HUD certified housing counselor with over 17 years of experience, working with a diverse community from Northern Virginia and the surrounding area. Martin also has an engineering background from his original country, Peru. He has worked with homeowners struggling to pay their mortgages and has an outstanding record of hundreds and hundreds of properties saved from foreclosure. He also assists families in achieving their homeownership dreams through Cornerstone's pre-purchase counseling program, where he helps with realistic spending plans, increasing credit scores, reducing debt, and saving for down payment and closing cost expenses. Martin also advocates for his Northern Virginia community by increasing residents' knowledge through seminars like this one, focused on financial improvement and community opportunity. He currently works as the Director of Housing Counseling Services at Cornerstones, and previously was part of a team of housing counselors at Housing Initiative Partnership in Maryland. Martin has received several certifications and many awards for his efforts over the years. So thank you for being with us today as well, Martin. And our format today is going to be kind of a Q&A. If you do have a question for one of the panelists, please enter that in the chat on the WebEx. We are going to do a couple of questions that we've planned ahead of time, and then we should have some time at the end of the session as well to take questions from the audience. So with that, I can take a break from talking, and I think that we have Karen who's going to answer our first question, which is, what is a HUD certified housing counselor, and how can a housing counselor help me?
So thank you very much, Christine, for allowing us to be a part of this great webinar. Both Martin and I are HUD certified housing counselors. And how can we help you? So we are experienced and trained professionals. We have both passed an exam. in order to become HUD certified. We can help advise you make informed decisions about a bunch of different things in regarding homeowner about actually being buying a home, renting. We can help you with foreclosure prevention, as we've mentioned, and some HUD housing counselors are also certified to do reverse mortgages. So generally, when we sit down or meet with somebody virtually, the first thing we typically do is we prepare a household spending plan or a budget. We'd like to get an idea of the income that you have and your expenses. And then we help you assess your financial situation. If your goal is to buy a home, if it's to rent a property, or whatever your goal may be. So we'll help you with that financial situation. And then just a note, so foreclosure prevention and homeless counseling services are always free from HUD certified housing counselors. So when we work with people that are in foreclosure, we help them as well evaluate different options that may be available to keep them from going into foreclosure. We help them make a plan, and we also help them a lot of times complete a package information that they will be sending to their servicer requesting for assistance.
Excellent. And Karen, you can move on to the next slide, and I think you are taking the next question as well.
Okie dokie, yes. Our favorite topic is usually pre-purchase because that's usually the fun part of our job. So I'm going to just briefly talk about different types of mortgages and guidelines for different types of loans. So loans come in many different shapes and sizes. And so it's really important for you to know what type of mortgage that you may be getting. So generally, conventional mortgages are mortgages that are ideal for borrowers who have good or excellent credit. In today's environment, they can be both adjustable, which means that they would adjust on some sort of a margin, or they can be fixed. In the past, we've been having a lot of fixed rate mortgages, but now with interest rates rising, sometimes an adjustable rate mortgage makes sense if you're going to stay in your property maybe 5, 7 years, or maybe 10 years. Conventional mortgages are not guaranteed by the federal government. They are typically Fannie Mae, Freddie Mac, or Ginnie Mae. They're sold on the secondary market. The down payment can be as low as 3% on a conventional mortgage, or you can go up to 20% or higher. So if you make a down payment of less than 3%, you're going to be paying something called private mortgage insurance. And typically with a conventional mortgage, you'll pay that mortgage insurance until you have 20% equity in the property, or automatically it will drop off when you have 78% equity. FHA loans and also conventional loans, typically for our area, for the DC metropolitan area, the limit is $647,200 for this year, for 2022. So there are several different types of government issued mortgages, and I'll talk briefly about FHA, VA, and USDA loans. So typically FHA loans are for people that may have some credit blemishes or not so perfect credit. The rates are also fixed and can be adjustable. The down payment is typically 3.5%. And with an FHA loan, you can get a gift from a parent, a relative, or an employer to cover your down payment. They are government insured, and they do require mortgage insurance premium, which is called MIP, and an upfront also mortgage insurance premium. So with an FHA loan, the mortgage insurance does not go away. So then moving on to VA loans, which are from the Veterans Administration. These are for active military members, veterans, reservists, or surviving spouses. And you do need a certificate of eligibility to get a VA loan. They also come in fixed and adjustable rates. They're guaranteed by the Veterans Administration. There is a funding fee of somewhere between 1.25% and 3.3%, but it can be waived if you're disabled. But the wonderful thing about VA loans is that there is no down payment. So if you are a veteran, you should definitely look into getting a VA loan. And then for those of you that are thinking about purchasing in a rural part of Loudoun County or somewhere in the area, there is something called a USDA loan, which is from the Department of Agriculture. And this is also a fantastic loan. It's 100% financing, no down payment. You do need to meet income eligibility. And again, you have to make sure that the property that you're purchasing is in an eligible rural area. This also, these are guaranteed by USDA, and there's a one-time guarantee fee. So again, if you're buying in a rural area, these are great options. And then last of all, jumbo loans are typically non-conforming loans. They go above conventional loans, and they may require a little bit more underwriting and may require also a higher down payment. So moving on to Martin.
Yes, Martin. So the question here is, if I can't pay my mortgage, what should I do? I'm sure you get this question a lot. And Martin, you are muted.
Here we go. Okay, thank you very much, Christina and Karen, for the presentation, and special thanks for Loudoun County to facilitate this kind of seminars that are very useful in the community. We always, in every single meeting that we have, we always say that one of the most important needs in our community is to provide communication and information about the options, because in this particular topic and situations when families and homeowners are unable to continue paying the mortgage, so people usually rely on what the neighbor or the family member or the friends say, and not necessarily that information is the best that the people need to get it. And instead of that, so it's a very good option to immediately contact the lender. If number one, I believe before to do that, I will say to any and all the homeowners, so you need to assess the situation. If you can pay your mortgage, you need to assess the situation and say, if this is a temporary situation, or this is going to be a permanent situation. If this is going to be a temporary situation, for how long you think is going to be the hardship? It's going to be for 1 month? If it's going to be for 1 month, you can easily negotiate 1 month with your own mortgage company. But this is a situation that is going to take 3, 4, 5 months, like any sickness condition, any job loss, or anything similar. So it's going to take a few months. You need to take a different approach. Okay. And in that case, so number one, I always want to recommend contact your lender. Your lender has the same interest than you that the mortgage continue on the smooth way with all the payments on time. But if you are for any reason unable to continue doing your regular mortgage payments, explain the situation to them and let them know that you are working, yeah, pretty active trying to resolve the situation. So there are some options that we are going to mention, I believe, on the next few slides, but this is the first point. The second point, you need to know your options. What are your options? So can I suspend my mortgage payment? Can I refinance? Many people believe that in this kind of particular hardship, the first word that is coming on their mind is refinance the property. But they need to understand that maybe it's a good option to refinance the property for some of them, but for others, they can qualify, especially if there is a lack of income, right? So for that particular situation, what you need to know is all your options. As Karen mentioned, there is a housing counselors on the area certified by the federal government. And we are two people just here on the panel very close to all the Loudoun County homeowners residents. So just the best way is to reach out. In some of the cases, like Karen, she provides services online or provide in-person service. In our case, in Cornerstones, we provide direct service in the similar way, face-to-face or by Zoom or any other online way. So, and we are very close. We are in Herndon, not too far from Loudoun County. So, the housing counselor, we are gonna explain to you all your options. Not necessarily all the options work for you, or not necessarily all the options would like you to take, but are your options, and you need to be aware of your options. And the third thing is you're gonna contact your lender. You need to explain your situation very clear. So maybe you are not ready at the time when you talk with your lender to provide a reasonable solution. Okay, because your lender, the first question that they're gonna ask you is when you are gonna be ready to resume your payments. But if this is oh, let me tell you what we saw in the last 17 years working with clients in this area. We saw sickness condition, loss of job, separation, divorce, deportation, incarceration. I don't know what is the kind of hardship, but if you are not ready to provide a response when you are going to be able to resume, that's maybe the best way is to contact a housing counselor and with your housing counselor prepare an action plan. How you are going to address the situation, how you are going to present a plan for your mortgage company, okay? Or your lender and say, okay, I'm unable to do my payment this month. I am unable to do my payment the following month, but then I'm gonna do this. So you need to present a plan. Okay. Keep in mind there are banks, they are gonna wait for you, but they're not gonna wait forever. So they're gonna sooner or later they're gonna take some decisions. Okay. It's better to be proactive in this intent and try to work with your mortgage company, right? And and one of the best advice is admit that there is a problem. So we have a problem. Don't try to cover the problem because it's going to be worse. You need the cooperation of your lender, and the only way to make your lender cooperate with the problem is understand the problem, right? So be realistic. Especially we have cases and cases, as you probably can imagine. And if in some of the cases I knew that some of the clients provide information with income that is not enough to even cover the mortgage. So if you are gonna provide an income that is not even able to cover the minimum mortgage, the lender will ask the question, how you are gonna plan to cover the rest of your home expenses? You have to be realistic, all right? If you are not able to cover your mortgage for this month or next month, just tell them. But tell them also that you are working on a solution, all right? So I have clients for issues like separation when 50% of the household income disappear from one month to another, and the remaining family has to create new sources of income. It is important to share this kind of information with your mortgage company because they are going to understand that even if you don't have a new income, but you are working towards the solution. All right, that's what I will say, and don't panic in regards the immediately hardship. Don't panic. There are options. The best way: number one, contact your lender. Number two, contact your HUD certified housing counselor. Why I didn't mention contact your realtor? Why I didn't mention contact another loan officer? Why I didn't mention contact your attorney? It's because the housing counselor, besides your lender, is the only one professional who doesn't have any interest in your solution. So if the realtor, the real estate person in front of particular solution, they're gonna probably give you an advice, but his main or her main interest is to sell a property. They make money selling properties. I have so many good friends on the real estate market, but I understand, how they work. For a loan officer, the main our goal for the loan officer is to originate a new loan, refinance a property. And for an attorney is to provide legal advice and with that obtain legal fees. That I don't try to say that it's not a realistic option, any of these three professionals. What I try to say is before to reach any of these professionals, just talk with your housing counselor. Be aware of all your options, not only one. And that you can move forward.
Great. Thank you so much, Martin. And I think Karen, with the next question, is going to get into some of those options. So thanks. She's going to first start with what is forbearance and what happens after forbearance.
So many people that have been affected by COVID-19 received a forbearance, which is actually a wonderful option for folks. It basically is a temporary suspension of payments. And so again, a lot of people have been in forbearances. Many of them have ended. Some of them are still in, some people are still in forbearance. So what happens when the forbearance ends? Because as you know, they don't go on forever. Your lender will offer you, your servicer will offer you several different options. And based on your situation, you may want to consider different options. So if you if you are able to make a repayment plan, that is where you're going to be paying more than your current mortgage and making up the difference of what you haven't paid. So that's one of the options. It's typically a little bit difficult unless your income has increased substantially. One wonderful option after forbearance is something called a deferral or a partial claim. So basically, this means that you resume your regular mortgage payments, and then they put the missed payments at the back of your loan. Typically no interest there. It's either a junior lien or it's a partial claim, and it just sits there at the back of the loan until you either pay off the loan or you refinance or you sell your property. So partial claims have been extremely popular recently, and they really are a very good option for people that are able to resume their regular mortgage payments. Some people are not able to resume their regular mortgage payments. And so sometimes you may or may not qualify for what's called a modification. This is where the lender, the servicer, will modify the original terms of your mortgage. And this is usually reducing your mortgage payment. It may extend the length of your mortgage. I've been seeing a lot of 40-year amortizations on mortgages. Interest rates typically are what the current interest rate are. Sometimes it's the interest rate that you got. It all depends on your loan. So it's very difficult to know what type of modification you might get unless you apply for it. And then there's something called a reinstatement or a lump sum payment. This would be something where suddenly you're able to suddenly, it's not very common actually, where somebody might actually be able just to pay off the amount that was in forbearance in a lump sum or again, that's not very common, but there are situations where someone might be able to just repay the entire amount that was in forbearance. Other options to save your property, and Martin mentioned some of these already. Refinancing, if your credit is still in good shape and you now have income that would qualify you for a new mortgage, you could try to refinance. I don't see a lot of people that are refinancing, but it could work. Other options are if you are 62 years or over, you could possibly get a reverse mortgage. This would require that you have a lot of equity in your property, so it doesn't always work. But I have several people who in the past have gotten reverse mortgages and have been able to stay in their property. And they're, again, over the age of 62. Bankruptcy is sort of your last resort. And again, we're not bankruptcy lawyers, so you would definitely want to consult with an attorney. But there's basically two different types of bankruptcy. There's something called Chapter 7, and then there's something called Chapter 13. So the Chapter 7 is a tactic that we sort of sometimes suggest if someone is about ready to go into foreclosure, because it will delay the foreclosure, but it's not a long-term solution. If you qualify, a Chapter 13 bankruptcy might work better for you because it will also stop the foreclosure sale, and it will give you a way of catching up on the past due payments through a repayment plan through the court. And it will also help you manage your other debts in the event that you have other debts that are preventing you from making your mortgage payments. So there are a lot of different options to save your property, and everybody's situation is unique. So we typically like to sit down with folks and go through their situation before we make any kind of recommendations. So I'm moving on to the next slide.
Yeah, great. Thank you, Karen. Yeah, and I think Martin is going to take this one. And the question is, what is foreclosure? Oh, Martin, we have to unmute you again. I'm sorry. I think I muted you earlier. Let me unmute you. There you go. You did it. There you go.
That's okay.
Thanks.
What is foreclosure? Okay. The last step that the bank or your lender, your mortgage company takes to resolve the unpaid mortgage is a foreclosure. And let me tell you, in the whole US, we can divide the states by judiciary states and non-judiciary states. Particularly in the state of Virginia, we are considered a non-judiciary state. What exactly that means in terms of foreclosure for a regular homeowner like you and me? Okay, that means that in a term of foreclosure, your lender doesn't need to go to the court system in order to foreclosure your property. If that means that the lender can just decide to foreclosure my property and do it by himself, no, not necessary. So in order to foreclosure a property in Virginia, so your lender, your mortgage company has to take a third party, a legal third party, an attorney with a resident office in the state of Virginia. So the main question that people who show up in our office along these years they show up very scared and say, okay, the bank sent me a letter of foreclosure. And we need to understand this, that is very important for all the homeowners. A foreclosure is not necessarily a foreclosure sale. A foreclosure is a long chain of legal steps that your lender has to take in order to finalize with a final sell date of your property. So if you read for any homeowner, if you read one of the documents that you sign at the closing when you purchase your property, one of the documents that is called the deed of trust state clearly, normally there is some exceptions, normally that after 3 months, just 3 months of an unpaid mortgage, 3 consecutive or unconsecutive unpaid mortgage in a year, so your lender has the right to initiate what they call the foreclosure procedure. But the foreclosure procedure, like I say, is not a foreclosure sale. All right, the foreclosure procedure is the beginning of all that change of events that they need to take are legal events. What kind of legal events they need to take? For instance, they need to prove to the later on the attorneys that give you opportunity to cure the default. Do they inform you in writing that you are on default, that your mortgage is unpaid, that they give you several opportunities by phone, by letter, by email, by text, that they try to contact you. So, and during all this time, in average, let's say it's not illegal. Remember that 3 months after, and in most of the cases, they have the right to initiate the process. But in Northern Virginia, more or less, according what hundreds and hundreds of cases that we saw in the past, in average, since the beginning of the one important letter that homeowners receive, that is the notice of intention of foreclosure, until the end, in average time, for a homeowner who didn't react, probably we are talking about something between 12 to 18 months. For a homeowner, again, for a homeowner who didn't respond any of the different ways that the lender took in order to address the situation. Okay? So it is important to say there is no way to be in panic if you receive that first letter. But it is important to mention also that we need to react. How? We need to prepare, we need to work on in an action plan, like I said before. You need to present a plan to the lender. Karen explained in the past several options. There are some options to work for you and some options that definitely doesn't work for you, but you need to consider all of them. But we had on the past, so I can take and speak more for experience than any other thing. I have clients who show up on my office 24 or 48 hours before the foreclosure sale date. We say at the beginning that you should contact your HUD certified housing counselor. But believe me, contact your housing counselor 48 hours before the foreclosure sale day is honestly nothing that we can do. But in that particular case, we even say there is a little window, there is a little light to solve your problem. How? Well, we refer most of our clients to an attorney to receive legal advice. In some cases, bankruptcy attorneys, they can bring a temporary solution for you. Why? Because what we need in that particular situation is gain time. Time for what? Time to design a plan that we can work together with your lender and we can bring the mortgage current again. And we've been successful. Karen is our first witness. We work in different agencies, but we saw hundreds and hundreds of cases that are engaged on this kind of negotiation with the lenders. And keep in mind, the lender doesn't want to take your home. The lender just wants to continue with the mortgage paying on the smooth way. But even working with the client and working with the lender at the same time, sometimes working with additional agencies that we are gonna talk about later on. So we've been able to bring mortgage currents and save homes here around your neighborhood in this particular area.
Great, thanks, Martin. And I think that Karen, if you want to go to the next slide, this is also going to be covered by Martin. And I think what you're stressing, Martin, is that there's always options. And here are some other options. What are some of the options if your lender doesn't want to help you, won't work with you, and you can't save your property? What do you do then?
Well, there are very unfortunate situations where families, even that they would like, they can keep the property. They can keep the property. I have cases. I have unfortunate situations that people are incarcerated 25 years in Richmond. So, and the person incarcerated was the main provider. So, unfortunate situations. There is no way to try to save those properties. Another case is when the main provider passed away, and so there are the relative, or there is not too many relatives or family with interest on the properties. Other kind of situations, difficult divorce, where no one of the parties wants to cooperate each other, and so when there is not agreement, unfortunately, there is no option to keep the property. So you cannot imagine, we saw all kind of situations along these years, but what are the options? The first one, when you are in a situation that you are unable to keep your home, we are going to mention the pre-foreclosure sale. Most people take this pre-foreclosure sale as a short sale. Yeah, so they're mixing between the first and the second. The lender may agree to allow the borrower for a specific time to sell. You can sell your property by yourself. And if you have equity, you can take all your equity. But this is a regular sale. So we have to correct here this presentation. This slide is a regular sale. You are able to take your whole equity. Let's say you have a $500,000 house with a $350,000 mortgage balance. You sell the property by yourself. You pay the real estate commissions, that's 3, 5, 6%. Total 350 mortgage plus $25,000 real estate commission, 375. You can keep the $125,000 remaining. It's your equity. It's for you. Okay, not a problem. Your credit is not affected as far as you continue paying your mortgage until the time that you sell the property. Short sale. This is a very similar than the first case, but when it's no equity on the property, you have a $500,000 property, but you have a $600,000 mortgage. In that particular case, so there is no way that you can sell on the regular market. So you have to coordinate with your lender in order to them to allow to sell the property. One of the most important uh, things that you have to consider is most of the lender will allow to sell the property. But how about the remaining balance, the $100,000 difference? So you can receive a forgiveness for that, but maybe you are going to face tax consequences because it's an income. That forgiveness is going to be an income for you. Number two, sometimes the lender is able to accept whatever less amount, okay? And there are another situation, there are no forgiveness. In that particular case, difficult cases, so you are gonna lose the house and you are gonna still owe money to your mortgage company. Deed in lieu is the third option. When you make an agreement with your lender to return the property. Okay, Mr. Lender, I don't want to deal with this problem anymore. I don't have time to deal with this problem. The only condition for the deed in lieu option is that you don't have any other lien in the property. Means you don't have a secondary lien, you don't have any tax lien. If you don't have any of all other situations, you can turn the property to the bank, even if there is no equity, and turn the keys. And sometimes we negotiate with lenders some moving expenses for the borrower. In some cases, on the past, some of our clients received 10,000, 15. I remember a couple of cases with $25,000 just to cover the moving expenses because it's a friendly agreement when the mortgage cannot go forward. All right. And finally, if you try all the previous options and nothing worked, finally the foreclosure will knock the door. The foreclosure is the final option that the mortgage company have to get back the property. The foreclosure is normally occur in the front of any circuit court in Loudoun County, Fairfax County. So, and they sell the property to the best offer, right? After the foreclosure, is most probably the homeowner has 30 days before to initiate the eviction procedure. The eviction procedure in this area usually take something between 60 to 90 days. It depends of the area and the situation. But after that time, homeowner or the former homeowners have to move out. Remember, bottom line. So even if you're in the worst of the worst situation, even if you're in a case that with many delays, you are close to the foreclosure sale date, there still is an option. Contact your housing counselor. They are not going to be able to resolve the situation in that very short period of time, but they're gonna make most probably the right refer or explain you correctly what is the only option available for you if you want to save your home.
Great, thank you, Martin. Karen, before we jump to additional resources and some questions from the audience, did you have anything else that you wanted to share about foreclosure or any of the other options that we shared?
Sure. I think the best thing to do is to open up your mail when you are not making your mortgage payments. Because if you do not open up your mail, you have no idea at what point of the process you are in. And I'm sure Martin has also experienced this when people come in with bags of mail and they want to open it up at our office, which becomes very awkward sometimes. But you really need to know where you are if you have not been making a mortgage payment. What do you think, Martin?
Absolutely agree. So, and bring immediately any letter. So keep in mind that there is one important letter that when in the process of this foreclosure procedure, let's call this way, so there is a letter not originated by the lender, originated by a lender's attorneys. Those letters are very important, and those letters give you a time frame to respond or dispute. There is incredible time that you can get when you dispute those letters on the right way. So we as a housing counselor, we can provide with all the information to how dispute those letters and gain what you need in when you are in the middle of a negotiation. Time. Time is absolutely essential in these particular cases.
The only thing I would add that this foreclosure situation is very different from what we experienced back in 2008, 2009, 2010, in that a lot of the servicers have a lot of information online. So the first, you should, besides opening up your mail, you should also go to their websites and see what kind of resources they have on their website. Besides seeing us, but just check out their website and see if you can also sometimes just do the whole um, negotiating directly with them. So thanks, Christine.
Yeah, no, thank you. And yeah, please, if we're ready, go ahead and move to that last slide, which just has some additional resources that we wanted to share. And I will just say, I'll briefly talk about the last one there, and then I'm going to turn to you, Karen, and you, Martin, to tell us a little bit more about the ones at the top. I just wanted to note that on the Loudoun County website at loudoun.gov and that link there, we do have information about foreclosure prevention. So please feel free to visit that. It has information about how to access a housing counselor and some information from legal aid to some frequently asked questions that could be helpful. The link above that is Legal Services of Northern Virginia, which we've mentioned before. Legal Services of Northern Virginia can provide legal advice. So that is just a resource if you feel like you need to take that step. And then I'm not sure, Karen or Martin, who would maybe like to talk a little bit about what Virginia Housing offers and the Virginia Mortgage Relief Program and CFPB.
I can start off.
Okay,
So
thanks.
Virginia Housing has a lot of, they have a wonderful website with a lot of information about what to do if you're facing foreclosure, or even if you're not sure about what's going on. So I urge you to go to that website. Not only that, if you're also on the other front of wanting to buy a home, there's a lot of great information on that. So the Virginia Mortgage Relief Program is a program that is for the entire state of Virginia, and it is providing up to $40,000 worth of assistance for Virginia residents that qualify for relief. And their website is virginiamortgagerelief.com. You can start the application either through their website or by calling them. They also actually have an office here in Northern Virginia, here in Arlington. If you are more comfortable seeing somebody face to face, I urge you to go ahead and make an appointment and go see them. We can also help you, but you need to make the application directly to them, and then we can also help you with all the paperwork. I've worked with several people who have just recently been able to bring their mortgages current through this program. The Consumer Financial Protection Bureau has some wonderful videos that you can watch about what is all these different topics that we've talked about in easy to understand language. And also Legal Services has also some, if you dig into their website, you can also watch some very, very informative videos about different legal topics. Did you want to add anything, Martin, about additional resources?
Yes, I would like to add, in the case of Virginia Mortgage Relief, if you are in the situation with a past due balance in your mortgage over $40,000, so the Virginia Mortgage Relief still can assist you providing the $40,000, but you have to demonstrate that you can cover the difference with your own funds. Number one. Number two, in regards Virginia Mortgage Relief, so Virginia Mortgage Relief not only cover mortgage default, also is able to cover defaults on homeowner association or condo fees, only if those mortgage default or condo fee or homeowner association are originated after January 2020. That in regards Virginia Mortgage Relief. In terms of Consumer Financial Protection Bureau, you need to understand, homeowners, that you need partners when you negotiate it with your lender. So if you try to negotiate just by yourself with your lender, if you are alone in front of a huge company, you need partners. So along the years, I found that Consumer Protection Financial Bureau was a very good partner with you, not necessarily find a solution with your lender, and we need to escalate decisions to the Consumer Financial Protection. Also, with another instance like the FHA government, with Fannie Mae, with Freddie Mac, keep in mind that they are not your mortgage company, but they are behind your mortgage, and they have the same interest than you to avoid the foreclosure. So it's not listed here, but I also recommend to contact your local representative. So like I have very good results when I contact congressmen on the area, your senator from Virginia. So they are very good results. So what you need to be is very proactive in this negotiation. Finally, difficult cases we have, unfortunately, like 10 of my clients who passed away in the last 2 years. And you can imagine how difficult it is to negotiate when the primary borrower passed away and didn't leave a will. So we have to deal with the probate division with your circuit court. And because it's a very complicated process, we always recommend to have legal assistance. We can obtain free legal assistance from Legal Service of Northern Virginia. Keep in mind, it's very, very useful website.
Great, thank you so much. And we only have 5 minutes left, but we do have a few questions that have come into the chat. So I'd like to try to cover those. If anyone else has additional questions that you'd like to add to the chat, please do so now. This first question is actually about the Virginia Mortgage Relief Program that we were just discussing. And the question is, do applicants to the Mortgage Relief Program need to be directly impacted by COVID? If anyone knows the answer to that question.
Well, you have to be behind on your mortgage. So there's a lot of different ways you can be impacted by COVID. Reduction in income, maybe loss of income, maybe you had a death in the family. So it's a very loose definition, but your income definitely, you do have to definitely have had some sort of hardship. You can't just decide not to pay your mortgage, basically.
Great,
Keep,
thank you. And I'm sorry, go ahead, Martin.
keep in mind the criteria that is any past due debt starting from January 2020. That's
Oh,
the
okay.
main condition.
Okay, great. And I'm sure all those guidelines are at the website that we provided there, virginiamortgagerelief.com. So please go ahead and visit that. And then there's a phone number there too that you can call directly and ask questions of. Thanks. So the other question, we are getting a couple of questions in the chat. Just I can answer these about whether the recording will be available for this session. Yes, I will send out the recording for this session. Some folks are also saying that they missed the session that we had last week. Happy to share that. If you don't mind, for the folks who are asking that about last session, if you could just send me an email to housing@loudoun.gov asking me for a copy of the session from last week if you did not register, just so I can keep track and make sure that I meet that request. I'd appreciate that. So just send me an email at housing@loudoun.gov asking for a copy of the recording from the 15th as well. I'm happy to send that along. And then we'll take one other question here. Came in earlier as we were talking about foreclosure and forbearance. And this question is, if I have a large amount of student loans, is that added to my mortgage? How does that impact my mortgage?
You're talking about student loans and your mortgage are two separate types of loans. So they are not connected. I mean, it's possible that your ability to repay your mortgage might be impacted by your student loans. In that situation, I would probably try first to go to your student loan provider and see if you can get some sort of assistance with that. But those are two different types of loans completely that are really unrelated.
Great. Thank you, Karen. I don't think we have, let me see if we have any other. Oh, there's one other question. Can you tell me how to locate HUD homes? I'm not sure if what folks are referring to there, but if anyone has information about that.
So HUD homes are homes that have been that have had a FHA loan and they have been foreclosed on. And so there's all kinds of information out there, for people that are trying to invest and they think that they're going to get a great deal if they buy a foreclosed home. But as Martin and I know, just because the home has been foreclosed doesn't mean that it's a great deal, number one. And number two, these homes are typically available on the regular multiple listing service that real estate agents have access to. So it's a little bit of a misconception that you're going to get a great deal by buying a home that's been in foreclosure. You could. If you buy a home at a foreclosure sale, then you're not even having a chance to look at it. And you're coming up, you can actually go to the courthouse for a foreclosure sale and bring a check and buy a home at auction. But that is a whole nother topic that I'd be happy to talk to somebody offline about.
Great. And with that, we are almost right at 1 o'clock. And so I'm going to go ahead and close the session. Wanted to just, again, thank Karen Service and Martin Rios for being with us today and sharing your longtime expertise with the audience. I did want to invite everyone, if you are still interested, we do have one more event this month. It's next Wednesday, the 29th. Representatives from the Dulles Area Association of Realtors will be providing an update about the Loudoun housing market. That session is at 2 p.m., not 12 p.m., so a little bit different time. But the registration is still on our website at loudoun.gov/housing. And thank you all for attending today. And like I said, we will send out the recording of the session today. Please feel free to contact any of us if you have additional questions after today. Thank you so much for being with us.
Thank you.
Thank
Have a great
you.
afternoon.